Islamic Interbank Money Market. What is that? Is it a market? Okay, what market? The Islamic Interbank Money Market is a market where Islamic financial institutions or banking institutions trade to offer liquidity for their assets between other institutions. This market allows financial institutions to obtain funds in a short period of time to meet the reserve requirements that have been set. It is also a fast platform for the provisions of short-term funds for those market participants to meet the capital requirement of their banking institutions. The maturity period of an interbank loans usually takes only a week, and the fastest is just overnight. This market, in short, fulfills the demands of both parties who experience surplus or deficit.
So next, I will move to present about the importance of Islamic interbank money market. Here, we have 4 importance of Islamic interbank money market. First, it will stimulate economic growth. As we know, in the context of Islamic banking, liquidity management is one of the important aspects to measure the bank's ability. However, the types of instruments need to be emphasized in this regard as well. In this regard too, the lack of interest security has limited the scope of financial management. Nevertheless, Malaysia is working to further develop Islamic finance and Islamic banking. With this, Islamic banking and financial system continues to develop, and this will necessarily facilitate liquidity matters for both parties, that is between the government and industry. Next, the second important is it can provide signals to the central banks. Each traded instrument has its own characteristics in terms of risk, profile, yield, tenor, marketability, and liquidity. There are various instruments offering a wide market to market players depending on their financial objective. Bank Negara has introduced a commodity murabahah program using palm oil as an asset, and it used the principle of tawarruk. The commodity murabahah program is to provide instruments to facilitate liquidity transaction for IFI. It is clear here that this commodity murabahah is used to inject and absorb liquidity from the market. Therefore, Bank Negara Malaysia introduced the Souk Al-Sila exchange as a traded platform for this type of money market instrument. With this, Bank Negara Malaysia can help develop this Islamic money market in Malaysia. Third important is to provide Islamic financial institutions with the facility for funding and adjusting portfolios over the short term. In this regard, Islamic financial institution is a financial intermediary whose job in this regard is to collect deposits and funds from surplus unit. Deposit and surplus funds can be collected either through individuals or firms, government bodies, or the private sectors. The purpose of this is to finance units that are in deficit. Bank deposit or liabilities are usually held on a short-term basis, so the money put into the saving and current account can be withdrawn according to the customer request, whereas the financing party or the debtor that is recognized as a bank asset is usually for long-term asset. So here the IFI needs to manage the time gap between its liability and asset. And lastly, the importance of Islamic interbank money market is to serve as a channel for the transmission of monetary policy. In line with Bank Negara Malaysia responsibility as the regulatory body for bank licensing and supervision in Malaysia, they use the IAMM to be used as a monetary policy. Monetary policy is a process where the government, central bank, or monetary authority of a country to control first the supply of money, second, availability of money, and third, cost of money or rate of interest. This is all to achieve a set of main objectives, which is to focus on growth and maintain economic stability. It can be said to be an expansionary policy because it can increase the amount of money supply in the economy.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabila Huda binti Muhammad Nordin. My metric number is 280760. So I will continue with the development of Islamic money market in Malaysia. So, recently, Malaysia is recognized as one of the top countries in the world for the growth of Islamic financial institutions. Malaysia had to go through at least 4 distinct stages of development, which is establishment of Islamic financial institutions, and then conventional banks are allowed to offer Islamic financial products and services under Islamic banking schemes, and then conventional banks were allowed to set up Islamic subsidiaries, and lastly, international integration of the domestic Islamic banking system. However, the following discussion will be focused on the 3 decades of Islamic banking development in Malaysia. In 1960 until 1990, which is the era of establishment of Islamic financial institution. Okay, so firstly, the establishment of Tabung Haji. Tabung Haji was founded in 1969, and its primary purpose is to enhance the economy of Muslim in Malaysia by collecting the savings of Malaysian Muslims who intend to perform the Hajj, which is a pilgrimage, and this is also one of its primary functions. And then the second one is the establishment of Bank Islam Malaysia Berhad. Right, Bank Islam Malaysia Berhad is the first Islamic financial institutions in Malaysia, and this bank officially opened in 1st July 1993. And then the main goals was to collect money, Malay money, sometimes referred to as the local Muslim fund in the country, and invest it in accordance with the Sharia law's prescription. And the last one is the establishment of Syarikat Takaful in Malaysia Berhad. So, Syarikat Takaful Malaysia Berhad was created in 29 November 1984. And then this group mandate was to look into the feasibility of starting an Islamic insurance company in Malaysia. In 1990 until 2000, which is the era of conventional banks allowed to offer Islamic financial products and services. Alright. In March 1993, the Malaysian government decided to strengthen its support for Islamic finance by allowing conventional banks to participate in the Islamic banking business, to offer Islamic banking schemes and services by utilizing their established infrastructure and branch facilities. In order for a bank to be eligible to participate in this scheme, it is required to meet all of the following conditions. For the first one is, banks are required to have 5 folds between their conventional and Islamic funds. And the second one, banks are required to establish an Islamic banking unit. And the third one, banks are required to create an Islamic banking fund. And the last one, banks are required to appoint at least one Sharia consultant to advise on its daily operations. In July of 1994, the government of Malaysia was established the Islamic Interbank money market. In 2000 until 2010, which is the era of establishment of Islamic subsidiaries and the international integration of the Islamic banking system. So in 2003, Bank Negara Malaysia was established the concept of an Islamic subsidiary in order to provide greater opportunities for the development of Islamic banking in terms of corporate governance, resources, and the strategic focus. So this was done in order to accommodate the growing demand for the Islamic financial services. And then the Sharia was also a consideration in the establishment of the Islamic subsidiary, since many experts have pointed out that the conducting interest-bearing banking activity and Islamic banking operations under the same roof may give rise to ambiguities. According to the information provided by the Securities Commission of Malaysia 2009, some of the commercial banks that established separate Islamic subsidiaries, which is the Hong Leong Islamic Bank, started off as a division of Hong Leong Bank until it was officially established on March 28, 2005 as a separate legal entity.
Assalamualaikum warahmatullahi wabarakatuh. My name is Fatia Husna binti Kamasani, number matric 280494. I will present about differences between Islamic money market and conventional money market. First, in terms of philosophical and ethical view, they are very synonym with the conventional money market regarding the exclusive owner of one's property as themselves. While in the philosophy of the Islamic money market is non-secular and based on Sharia principles, whereby the individual is considered as the servant of Allah, and the significant owner of all wealth is Allah, and a person is the trustee of Allah. A person must manage the properties properly. Any extra must be given to the needy through zakat or zarakah. Second, in terms of profit earning, conventional money market is based on interest rates on the market security. Interest rate change can have an impact on the value of almost any security. They have a direct impact on the market values of that securities in the money market, and interest rates are the primary determinants of any securities market value. Interest rates are not permitted in the Islamic money market. Instead of interest rates, the Islamic money market is based on profit sharing and loss, gifts and compensation. Next, in terms of profit rate, for Islamic money market, not highly influenced by the economic policies, while conventional money market highly influenced by the economic policies. Economic policies have a significant impact on interest rates. As a result, the movement of the government's economic policies should have a high correlation with the movement of interest rates. However, the profit rate should be tied to the real economy rather than economic policy, according to the definition of Islamic financial product. Next, in terms of operational view, Islamic money market applies the entrepreneurship relationship, as both parties have the right to the return either loss or profit. In contrast to conventional financial product, which have a fixed interest rate, financial institutions face no risk. In the conventional market, it uses the lender-borrower relationship, as one party will act as the capital owner and another party as the borrower. Next, in terms of interbank market, Islamic money market utilize Sharia compliant contracts such as mudarabah, murabahah and wakalah, which are approved by both the council and Sharia commit. While for conventional money market, issues debt contract for placement of funds. Okay, we move to the next difference, which is issuance process. For Islamic money market, it must be Sharia compliant and approved by both the council and Sharia commit. While for the conventional money market, it must be approved by the respective financial regulator. Next, in terms of type of structure, most of the products and instruments are structured based on assets, equity and debt base. While for the conventional money market, most of the instruments and products are based on debt only. Last but not least, in terms of investors, both Islamic and conventional investors have the interest to invest in Islamic money market. Only conventional investors are attracted to invest in the conventional money market as it is non-Sharia compliance. That's all from me. Thank you.
So from the discussions we have done, we conclude that the interbank money market is one of the most important market in providing Islamic banking facilities as well as a support to launch the bank's functions itself, especially for financial instruments. So in order to stimulate the economic developments, banking transactions between banking institutions in Malaysia need to be actively carried out, especially those involving exchange and free trade, whether through Islamic banking in Malaysia or abroad.